IBC is a totally different paradigm. It's really a personal monetary system. See, that's the problem. Life insurance, as we know it, whole life insurance, should never have been called life insurance. It changed characteristics totally, and we shall see before our course is over. You've got to develop new habits. You can't live the way that other people live. You can't think the way they do. Now, fatal error is thinking it's a matter of function of interest rates, but there's the stumbling block that prevails in so many fields out there today, the minds of people. You got to recognize where money is flowing to. The failure of charging interest for yourself for the things you buy using your own banking system. In other words, don't steal the fees. This is simple. Anytime you can eliminate the payment of interest to others, direct that same market rate of interest to an entity that you own and control with minimal taxation, you've improved your situation. Now, Monica, I think it was you that I heard say earlier that it's somehow ingrained in the Chinese thought process, loans is bad. Is that right? Was it you? Mm-hmm. Well, if you're the banker, loans is good, love.
Yeah. I think so.
We're not talking about investment anything yet. We're talking about being a banker. The higher interest rate you charge, the better. If you're the banker. I think a smart thing for life insurance companies to do is consider having a subset for people who understand banking and charge all those folks policy loans 20% interest. You built a microcosm. So.
That would work if they got a higher dividend. That absolutely.
Well, of course it would. You can't help that.
It's the only natural thing that can happen. They would have to.
Yeah. And that's the most.
I mean, think about it. If you're going to limit the people, if you have direct recognition,
mm-hmm.
and you're limiting the return for the person who has a loan,
mm-hmm.
why not reward the person who is willing to pay
exactly
market rate interest?
Absolutely. If they could do such a thing, I'd participate in a heartbeat. Okay. But that's the way things go. Now, I'm a very slow learner. Would you believe I took Fortune magazine for 35 years? I'm wading through 24 issues per year, Wayne, plus 2 bonus issues to find one decent article.
That's the record.
Because you see, all the articles in Fortune magazine is about, look how good old Ken Lay is doing with Enron down there in Houston. Look how good old Bernie Evans is doing with WorldCom in Mississippi. Look how good old Richard Scrushy is doing with HealthSouth in Birmingham, Alabama. Wayne, his bonus that year was $110 million. That's his bonus. Now, by the way, for the last several years, Richard Scrushy's been living in a gated community called Fort Leavenworth. They give him shoes and clothes for meals a day. They finally caught up with him. He and the governor of Alabama at that time were in cahoots of defrocking people of money. And so the governor's still there. Richard's out harassing the public again. So. All right, well, here comes the good rule. Mary and I have been to the Far East for a month vacationing. And we come back, and here's that pile of mail. And so I'm wading through all that stuff, and here's the second issue of Fortune magazine. Cover story. The real key to building wealth, economic value added, a concept put together by Stern Stewart Consulting Firm in New York. They have clients like Coca-Cola, Briggs & Stratton Engines, Quaker Oats, CSX Railroad, folks like that, run by Harvard MBAs and so forth. Now, Stern Stewart is teaching these brilliant business people that, look guys, y'all got money in capital, your stock. You got money you borrowed from banks. Now this shoulder's bad, I'm sorry. Y'all got money borrowed from banks. banks. You're paying those interests, folks' interest. You aren't charging yourself interest for your own capital. That's a violation of Finance 101. Capital always have a cost. Act like it. And so Stern Stewart is making millions a year in consulting business, teaching high-priced executives of Wall Street firms Finance 101. Now that's got to be the most absurd scenario I can ever think of. Now the author of the article is Sean Tully. Sean Tully says, how in the world is this happening? His explanation, they're listening to accountants. Accountants don't think this way. Accountants think around the IRS code. They think if I can't show you a tax advantage of some kind, I would earn my fee. So, Stern Stewart is teaching them Finance 101 and making all kinds of money. Because by making sure that they're paying themselves interest on their own capital, now they know, buyers know that the value of their company is going to increase every day of every year. Rich, that's exactly the definition of a life insurance policy. Now, I'll be leaving you guys tomorrow, and we've had a great deal of fun with you guys. Thank you for letting us be here. Jason, thank you, sir. Appreciate it. All right. Now, do y'all know my cash values are going to be increasing as we ride down to Leavenworth?
Yes.
And when we do some more sightseeing around the Seattle area, my cash values are going to be increasing. And we get on that airplane Monday, riding home, my cash values are going to be increasing. Stern Stewart is making all kind of money, teaching Harvard MBAs that fundamental principle. Good Lord. What is this world coming to? Now, let's think this thing through. Did y'all know a town of 35,000 population?
Yeah.
Nacogdoches, Texas is. That's the oldest town in Texas. Piney Woods of Eastern Texas. Due north of Houston, kind of due south of Shreveport, Louisiana. You can't get to Nacogdoches from here. You got to go one of those other places and then go. Anyway, CSX Railroad has 35,000 employees. Now let's just suppose, we're going to play a game here. Let's suppose Stern Stewart says, you don't need to do business with us. You go to Edmonton, Canada, and there's a guy up there named Jason Lowe. Buy high-priced life insurance on all 35,000 employees. The higher the premium, the better. Now, you know, in about 2 or 3 years, they get a ton of cash values. They need to buy some locomotives. And so they call Jason's office and say, Jason, get us $50 million policy loan. We want to buy some locomotives. Jason gets them the money, gets them an amortization table for an agreed number of years. Test time, what is the interest rate that Jason's going to charge?
Market rate.
10%.
What's equitable charging? 7? What's Jason going to do?
Greater than 7.
Oh, that's meaty mouth. I need numbers.
Probably 10 to 12.
10 or 12, yeah. All right. Now, Richard, aren't they going to pay off the loan before they finish the schedule?
Betcha they will.
If they don't finish the schedule, are they obeying what I'm teaching?
Stealing the peas.
That's right. Well, how do you rectify that?
Slap them around a little bit.
Yeah, but what you do is you buy another policy on all 35,000 employees. Now, you know you can get carpal tunnel filling out all them applications.
It's all done online.
Every field of work has problems with it. And that's the problem. You can get carpal tunnel filling out all them applications. Now, I've been in Nacogdoches a while. They have a newspaper there. I've never seen one of the newspapers without an obituary column title. Somebody in Nacogdoches died every week. Is this registered? If CSX Railroad did what it's got through saying, did you know that CSX Railroad would have a death benefit every week? And that be tax-free? Well, why are people doing this? They don't know. Well, what's your job?
Gotta go tell
Do they need to learn this?
them. Absolutely.
All right. Do you see the vastness of this?
Mhm.
Let's amplify that a little bit. Do y'all know where a FedEx freight line is? Memphis, Tennessee. Do y'all know the story of Freddie Smith there?
He was almost broke.
Huh?
So when we started FedEx, he was down to the nitty gritty,
It was
and was
Flying Tiger Airlines.
like three days from belly up. At
Well,
one
yeah,
point.
but back there in the time that he was putting all this idea together, he was saying to the professors, he was going to create this transportation company where goods were all shipped to Memphis, and they'd play fruit basket turnovers, and they'd all go back to the locations of where the merchandise was going. And the professor says, there's no way that'll work. So now, Freddie Smith sends them his financial statement every year. How many airplanes do they have? How many trucks do they have? Do you don't see the possibilities that's out there? Well, we got to start from where we are. We got to get a few to the point where this begins to get momentum. And when we get 10% of the financial world to understand this, it goes viral. People quit thinking the way they used to think then. That's our mission. And that's going to involve lots of people that understand this and participate in this. And that's why we created the Nelson Nash Institute.